You should see it down the bottom of the thing that says share screen.
Got it.
Okay.
There we go. Okay.
Do you see it?
We can see it.
All right. Okay, thank you. Surprise, surprise, the water guy picks a water stock. Full disclosure, I have no idea about the domestic water utilities market. So it was an interesting exercise from that point of view, as well as from the investment point of view. So I was pretty happy to be able to do this. Just going over the agenda quickly, just an executive summary on the water market as a whole, looking at that industry, kind of zooming in. As you guys know, the better an industry does basically translates into the better the companies within that industry and the relevant stocks do. So that's important to look at. My investment logic and algorithm, it says 2.0, and I'll get to that, but my initial results were kind of bleak. They didn't meet the ESIF criteria, so I had to rerun my analysis to get there, but I found a company, and I'll show you the valuation of that company, that stock, and then wrap it up with a conclusion. Okay, so the water industry, that says a lot. There's a lot of things within the water industry, but basically I came up with this definition. And the water market describes the collection, treatment, and distribution of water to the public and private sectors. And the utility, what is that? Basically, you guys know when you hit the switch, the lights turn on, and when you crack the valve, water flows. That's the job of an organization that maintains that infrastructure, and in this case, the supply and distribution of water. So water at a glance, water is big business. It's huge, 38 billion per year, growing at about 5 to 6% CAGR, just on the equipment side alone. So that's filtration, that's the membranes, that's different types of chemical processes that are involved in water treatment, and that excludes things like greenfield infrastructure projects, distribution networks, and services. So all in all, what I could find, it's $100 billion market, water. But you can go from very high tech segments, as we go here from. You can see that it's highly segmented, from wastewater, irrigation to water treatment, et cetera, et cetera. I won't bore you with the technical details, but depending on the mode of water treatment, it goes from very low tech to high. So it's all over the place, and that translated as well during my analysis when I saw the different valuations of the stocks. Market conditions are all pointing towards growth, and I'll tell you why that is. But analysts are estimating about a 7.4% CAGR, at least through 2020, in the water sector. And then the healthy demand drivers are well known, and I'll talk a little bit about the energy-water nexus. You basically need water to make energy, and you need energy to make water. So there's a very strong relationship there. Okay, now looking at the industry, this slide pretty much sums it up pretty well. It's all over the place. The stocks that I put in this chart that are above the 0% growth line are all domestic, and all the ones below are all international. I basically use some of my customers, some of the municipalities that I know that we sell to, and put them all on a chart here, all the way from August of 2015 till about today, end of Q3 2016. And there's a pretty nice spread. The geopolitical forces behind this are real, and I'll get into that in the next slides. But this was no easy task, identifying a water stock that was undervalued. Looking at the demand drivers, we all know that this is heavily dependent on supply and demand. Supply quickly is well known, well established. 97% of the Earth's water is not potable, meaning it's in the oceans. You cannot drink ocean water. It's too high in saline concentration, so you can't drink it. So out of that 97%, there's only 3% remaining. Of that 3%, 2 of that is, or 98% of that 3% is captured in glaciers. So you cannot drink that as well. So that leaves a minuscule amount of 1% of the world's water being potable. So you don't need to be a rocket scientist to understand that our demand is growing. We have climate change, we have population growth, we have industrial growth. All these things require water. So it's projected, I call it D-Day, but I guess it's D-year, is 2030, when the global supply and demand will intersect, and the demand will actually surpass our current supply in that year. So that's pretty bleak. So with that bleak information, why are there, I started to ask myself, why isn't this industry exploding at an even more rapid pace? So I started making calls. I started talking to some of the utilities, some folks I know within the water industry, and this is highly political. Water is extremely political. There have been and will be wars fought over water. This is something near and dear to my heart, as well as you all know Peter DeBear. The economics of water. How do you charge? For something that people deem should be free? It's like charging for air. So the economics behind water is real. Basically the OpEx to produce water is very close to what it's being sold for. So there's a lot of government subsidies. There's a lot of kind of creative financing mechanisms to make these water projects move forward, but it's not growing at the rate at which the supply and demand curve is shrinking. So it's an interesting relationship there as well. So now zooming out of water and zooming into the individual stocks, this is what I did. Here on the logic, you can see here in my logic, these 4 steps is basically what I did. I ran an IQ search out of the S&P 500, and it resulted in 11,000 stocks. And I basically just said, give me everything that has to do with water, water treatment, power generation, wastewater, and it yielded this tremendous, overwhelming list. So I started to filter that list down. So I basically used a 5-year industrial average on key metrics that we've all discussed in class, PE ratios, price to book, etc. And I used these criteria to find value. So I took the average. I basically here, I took the PE, price over book value, and then this should be a V, sorry, that's a typo. The total enterprise value over the EBITDA, and came up with the average price that it should be based on these multiples versus the last price that it was trading at. And then I came up with a variance. So you could see here that this stock is basically this analysis is saying that this stock is 108% undervalued, which is nice. But the bad thing about this is that all the stocks that I was able to evaluate, none of them were in the US stock exchange. So you can see here that we have the Tokyo exchange, the Brazilian exchange, the Vietnamese exchange, nothing in the US market. So I redid this analysis using different logic. I used only the US water utilities and took the 5-year average of all those, and it came up with a different set of criteria that I would use to dictate value. And that's kind of how I took the first cut at the companies that I would evaluate. I found basically 3. One of them fell away pretty quickly because the market cap was significantly lower than what we were looking at. That left 2, San Jose Water and then American Water. So I chose American Water after doing a little more digging. But I also wanted to know why I didn't find any domestic water companies initially. So I started talking to a few of my friends again. I knew some guys that just recently went IPO on the New York Stock Exchange with water companies, and I spoke to those folks. And we basically came up with these 3 bullet points. 1, the U.S. is highly regulated. So there's federal, state, and local regulations that not only dictate the quality of the water, but also, in a way, the pricing. So it's limited there. You set a floor and a ceiling, and you can't go pretty much below or above that. So that kind of limits the revenue streams. There's reoccurring revenue in the U.S. Domestic market, and that's different from the international market, where there's different types of contracts, take or pay contracts, pay for what you have, and then also different tariffs, which mean that you pay more when the load is high. So during the day, the water tariffs are high, and at night, when nobody's using the water, it's low. You don't see a lot of that in the U.S., or it's very, very minuscule, the difference between price. So reoccurring revenue is good. It's like an annuity. You can value that all day long if you know what the revenues are coming in. So it's easy to value. And then in the end, the U.S. exchange is efficient. We're very good at valuing mature industries such as water, companies like American Water and San Jose Water, and even the local utilities here in Virginia are all pretty well valued, if not overvalued. But I saw value in American Water, and I'll walk you through that. So what is American Water? American Water is a utility. So basically, they're in charge of providing you with a repeatable, predictable, high-quality water supply. They serve the municipal industry, private and public sectors. They're huge. They're the largest publicly traded water municipality in the U.S., which I did not know. Massive market cap of $13 billion. You can see the number of employees and the number of customers they serve. These guys are everywhere. And they basically have two modes of operation, a regulated business and a non-regulated business. The non-regulated business is basically services, where they check your meters, fix pipes, infrastructure. And then regulated operations is they own the assets. They own the water treatment facilities. They own the water distribution networks. They design and operate and deliver water from their treatment plants to your home. So again, I was looking, why, as I started to do further research on American Water, I found this slide. I think this was in their annual report, why American Water, and I just kind of boxed in kind of the key ones that really caught my eye. One obviously was growth. Earnings per share. This is tremendous, especially in the municipal water utility business. 7 to 10% growth projected on earnings per share over the next 5 years. Massive growth. People and business model. Again, as I mentioned, these guys are the largest guys in the game. They're broad and diversified experience. There's 6,700 employees. They have scientists, R&D folks. Also, the guys that come out and service, any issues.
To this slide too.
Okay, I don't know if it's me, but I had this problem at work as well using the same program, Zoom, and I got multiple stuff going on. So they asked me to stop my video to make sure. It might have been me that kicked it off. So I'm going to stop it again. I don't know if you guys want to, but.
No, it was just an error in which account we were using, Rodney, so it automatically shut off at 45 minutes.
Yeah, you're good.
I think we're still on a 40-minute account, but we can just go for it.
Okay.
Okay. Well, okay, so you heard nothing on this slide.
No, I
Not
think we
yet.
heard most of this slide.
Yeah, we heard this slide. Yep.
This one? Did you guys hear anything on this one?
I think this may have been where it cut off.
Yeah.
In the
Okay.
middle of this.
Can you pick up from here?
Absolutely.
Thank
So in this slide, I was just talking about American Water Works as a company. They're the largest publicly traded water utility in the U.S., and that's nice. So that gives you stability. They serve most geographical areas in the U.S., 47 states plus Canada. You can see the market cap here of $13 billion, well established. They have two operating modes. One is a regulated business, which they own the asset, meaning that the water treatment plants are under their ownership, their operations, and they operate those and deliver water to the end user. And then the non-regulated operations are they've taken over operations of somebody else's assets, or they offer additional services within that market. And it's an 85 to 15% split between those two businesses that gives them a little bit of diversification. The non-regulated operations, higher margin business, they're able to charge more for their services and operations. The regulated business, they can charge a little less. What's interesting here is that I learned that with water, there is no real ceiling. You can charge whatever you want for water, but there's a process for that, and it goes through an approval process. So you can't just wake up one day and say, I'm going to raise the rates, 10x. You can raise the rates per year, but it's going to have to go through the regulatory process there. So I got this slide from their annual report, I believe, and I kind of boxed in kind of the key things that got me excited about American Water as I started to do a deeper dive on them. Obviously, growth within the water sector, 7 to 10% earnings per share growth is massive. So that was good, very healthy. They also are growing their dividends, I think 11% per year since 2012, and see that going into the foreseeable future. So they're recognizing and paying their shareholders for their investment. They have a very diversified, not only business segment, but also geographical standpoint and a human capital standpoint, these guys do a lot of stuff in a lot of places. So I like that as well. And then obviously the stability here, that's to me, this company is very low risk. They've been around forever, I think 130 years. They're growing at a pretty alarming rate. So the trick here is to see if they were undervalued. So that leads us to valuations. So I looked at some of the key metrics that we've been discussing through our valuations classes and beyond. So I looked at basically growth rates, both on the top end, top line revenue, as well as the bottom end on the earnings per share. They're both growing higher than the U.S. industry average of 5 years. So that was attractive. And then you could see all the other items here that show undervalued, looking at ROE, for example, and some of the other metrics. Something else that jumped out at me was looking at some of the estimates. I looked at 12 estimates. Overall, the consensus was about $80 per share, which was the consensus, and something that was very close to, believe it or not, the DCF model that I came up with. So there was 3 things I looked at. I looked at the analysts, because these are pretty smart guys. This is what they do every day. And they were showing about an 8 to 10% undervalued valuation of their American Water Works' current stock. The multiple method that I kind of explained earlier, looking at the price over earnings, the PE ratio, price over book value, and the enterprise value over EBITDA, I took the average of those 3 and came up with about a $79.18 or 7.4% undervaluation versus the current share price. And then the DCF method, using these assumptions here, WACC of 9.8, steady state growth rate of 3, and then the growth rates on the top end and bottom line that were previously mentioned in their annual report. And I came up with $80.50. Buy. So taking the average of the 3 methods, analyst, multiples, and DCF, versus today's low of 71.87, I see value here. They also pay a dividend, which is growing 11% since 2012, and they're projected to grow about the same rate for the next 5 years on the dividend side. And you guys saw the growth rate and potential on the revenue side as well. And then the valuation method, just tried and true, show that they were slightly undervalued and worth having a look at. And then I guess just to wrap it up, you guys know that water is near and dear to my heart, and I believe that industry as a whole has nowhere to go but up. Looking at the current supply and the way we're using in demand, the demand, it's the only thing that's going to happen is the price of water is going to increase. Right now, it's extremely low. Again, people think that it should be free. So it's going to be a trick. It's going to be an economic trick to see how water is priced in the future. But I think that American Water and companies like them will be able to capitalize on that in the future. I think that's it. Yep. I do think I used up almost all the time, so I could take a couple questions here. Or
Okay, thank you very much.
welcome.
If we're running out of time, should we put off questions and then send questions afterwards? Tom, what do you think?
Unless someone has something that they want to ask now, I'm okay with that, because I know sometimes it takes a little bit of processing to think through what you might want to ask. But if there's something that someone's got on their mind right now, maybe we've got time for one.
Okay. Everyone, I've tried to upgrade to the pro account, so we shouldn't have any more problems. We'll see. I mean,
It worked, Bob. It worked. I saw the message.
Is it okay? It worked?
Yeah. It worked. Yeah.
Okay. Perfect. So Rodney, what I'm going to have to do is I'm going to send me your thing, and I'll put my questions and comments when I send it back to you. Okay?
Yes, sir.